Wow. We should be recording. Hello everyone. This is Dr. Swati Mishra from International School of Business Management at Suresh Gyanvyar University, Jaipur. And we will be continuing further with our sessions of Indian business houses. Today we are starting with a new unit of Indian business houses wherein we will be discussing the various policy changes in the business environment done by the government and how they have impacted the Indian business houses. So if we talk about the learning objectives of today's session, this session basically aims at giving the learners an understanding the reforms done by the Government of India for the Indian business houses. It also aims at providing an understanding of the new economic policy and the measures taken under it. And it aims at giving an insight to the liberalization and globalization objectives of the government's policies. After this session, you will have an understanding of the reforms done by the Government of India for the Indian business houses. This session will provide you a clear-cut understanding of the new economic policy, the industrial policy, the Companies Act, all these different policies that were introduced by Government of India, and the other measures that were taken by the government for the development of entrepreneurship in the country. It will also leave you with an insight to the liberalized policies of the government, how, before liberalization, what kind of issues were there for different business houses, and how these liberalized policies have, made the entrepreneurs explore new opportunities, how it has opened doors to the foreign direct investments in the country, and how India was able to take up its business activities at a global platform. So all these are actually the learning outcomes of this session. So maybe start with the actual discussion part of this session, wherein we will be talking about the policy changes and the businesses, how they have tuned up together and how they have actually, worked in the betterment of the nation as a whole. So today's main topic of discussion is the new economic policy, which was introduced in the year 1991. So we will be discussing as to what this new economic policy was, what were the objectives, what were its features, and how it impacted the growth of business in India. So this new economic policy of India was launched in the year 1991 under the leadership of P.V. Narasimha Rao ji. So this policy basically opened the door of the economy in India for the global exposure for the first time. And in this new economic policy, Mr. P.V. Narasimha Rao, his government reduced the import duties. They opened reserved sector for the private players also, and they devalued the Indian currency to increase the exports. And this all is also known as the LPG model for growth. So economic policy basically refers to the economic liberalization or relaxation in the import tariffs, and deregulation of the markets or opening the markets for private and foreign players. This policy also introduced some new reforms like reduction of taxes, so that the young entrepreneurs and the new entrepreneurs can also enter the industrial sectors, and it also helped to expand the economic wings of the country. And slowly, the country took flight towards globalization, and liberalization being one of the important steps and measures being taken by the government of India, we could actually take a leap towards globalization, and Indian industries could perform at a global platform. So, former Prime Minister Manmohan Singh ji is actually considered to be the father of this new economic policy of India, and he was the one who actually introduced NEP on 24th July 1991. So let us actually look at the main objectives of the new economic policy, which was launched in the year 1991 on July 24th. If we talk about the main objectives behind launching this new economic policy by Union Finance Minister Dr. Manmohan Singh, the first and the foremost was to plunge Indian economy in the arena of globalization and to give it a new thrust on the market orientation. Secondly, the new economic policy intended to bring down the rate of inflation and to build sufficient foreign exchange reserves by reducing the import export duties, the excise duties, so that more and more foreign direct investment could come into our country. Multinationals could be brought in the lands, and this would rather improve the economic conditions of the country, create more employment opportunities in the country. So this actually, this policy wanted to achieve economic stabilization and to convert the economy into a market economy by removing all kinds of unnecessary restrictions that were there on the trade practices in our country. And these restrictions were actually making the entrepreneurs very reluctant or hesitant in entering into new markets, or trying to grab new opportunities. So this policy basically wanted to permit the international flow of goods and services, along with the capital, human resources, and of course technology, so that more and more latest technologies can be brought into the country, and industries could adapt those latest adopt those latest technologies, and use some smarter ways of production, and smarter techniques of production. This also helped us improve the precision with which the production used to take place, and thus introducing products with latest technology in the markets also. Another objective of this policy was to increase the participation of the private players in all the different sectors of the economy, and that is why the reserved numbers of sectors for government were reduced actually, and as of now this number is just two. So, with this introduction of NEP into India, there were some radical changes that were, brought in. These radical changes were, of course, the policy-related changes that were brought in, like foreign trade got increased to a higher level. Then foreign direct investment was increased to a very great level, and we could have more and more FDIs coming in. This also improved the exchange rate for our country, and of course, the industries were flourishing in the land, and fiscal discipline also took a greater and a better position in the country. So, when these various elements that I've just spoken about, when they're put together, they constitute an economic policy altogether, which marks actually a gone before. Talking about this new economic policy, the thrust of the new economic policy has been towards creating a more competitive environment in the country, because when the restrictions on trade and other business practices will be reduced, we will definitely see more and more entrance into the market, and this will actually rather improve the practices of the business houses, and there will be a more competitive type of environment within the industries. And the more competitive environment in a nation, the better is the performance of each and every organization. They serve their customers in the better manner. They value their customers more, and of course, this actually benefits the customers more than anyone else, and thus it also leads to not only having an improved productivity and efficiency in any country, but also it helps you to improve the overall economic conditions and of course the living conditions in your nation. So the thrust of this economic policy was towards creating a more competitive environment in the economy as a means to improving the productivity and efficiency of the system. And this was to be achieved by removing the unnecessary barriers to the entry in our markets, and the restriction on the growth of the firms. Then, of course, the 5-year plans were introduced, and there are multiple 5-year plans. The first 5-year plan in India was actually launched under the leadership of Pandit Jawaharlal Nehru in 1951. And since then, India has witnessed around 12 5-year plans. And of course, the present government has, however, discontinued the 5-year plans when Narendra Modi's government came in, and a new mechanism was actually put into place. So we will also have a look at these 5-year plans which the country has witnessed so far. But before that, we will first complete our topic of the new economic policy, and then maybe in the next session we will be discussing the 5-year plans of the country, and which 5-year plans were successful, what were the different measures that were taken under these 5-year plans. We will discuss each and everything about them. So, as far as the new economic policy of the country was concerned, there were some major measures that were adopted under this new economic policy. So, in initially, in the olden eras, post independence, due to various controls, the economy had become very defective. The entrepreneurs were unwilling to establish new industries because there were laws like, the MRTP Act, which is also called as the, uh, you know, Monopolistic Restrictive Trade Practices Act in 1961. It was actually demotivating the entrepreneurs. Then, of course, there was a lot of corruption post independence we saw, because the economic conditions were very poor and people were like, trying to take bribes and, somehow fill their pockets. So, this corruption, any kind of undue delays, and inefficiency had risen due to these different controls that the government was actually exercising on the business policies. So that is why the rate of economic growth of the economy had come down. So in such a scenario, there was a need of the economic reforms, and that is why economic reforms were introduced to reduce the restrictions which were imposed on the economy. So, if we talk about this new economic policy that was launched, it mainly had three main aspects. The first one being liberalization, the second one being opening the doors to privatization, and reducing the government control on different sectors and letting the private players come in. And of course, the third one was globalization, so that our countries could actually function at a global platform. So, multiple steps were taken under liberalization. Some of them I have jotted down on the screen also, if you can see. The first one being free determination of interest rates by the commercial banks. So, under the policy of liberalization, the interest rate of the banking system will not be determined by the RBI, and rather, all the commercial banks were independent to determine the rate of interest. Of course, there was a control by the government. They could not charge any rate, but still they could determine their own bank's interest rate. And of course, there was increase in the investment limit for the small scale industries. Investment limit of the small scale industries had been raised to rupees 1 crore. So these companies can actually upgrade their machinery, improve their efficiency. They could actually adopt the latest technology because of this good step that was taken by the government of India. And the government also introduced freedom to import capital goods, wherein the Indian industries will be free to buy machines, buy any kind of raw material that is required from the foreign countries to do their holistic development, right? And then there was this freedom for expansion and production was given to the industries in this new liberalized era. Now the industries were free to diversify their production capacities and to reduce the cost of production. Earlier the government used to fix the maximum limit of production capacity, and no industry could actually produce beyond that limit. So now the industries were absolutely free to decide their production quantities, and uh, they could decide as to how much and what they are going to produce on the basis of the requirement of the market. And of course, there are a lot of industries who keep a check on the production rate and production practices being used by the organizations, so that they are not any kind of harmful raw materials which are used, or the practices are not harmful to the environment or the employees of the organization. But still, a lot of freedom of expansion was given to the production industries. Then there was, of course, this abolition of any kind of restrictive trade practices. According to the Monopolies and Restrictive Trade Practices Act, the MRTP Act, which was launched in 1969, all those companies which were having assets worth rupees 100 crore or more were called the MRTP firms, and they were subjected to the several restrictions. Of course, now these firms have not to obtain the prior approval of the government for taking any kind of investment decision. And later on, in 2002, this MRTP Act was replaced by Competition Act in India. Let us now have a look at what this Competition Act that was introduced in the year 2002 was. Talking about this Competition Act, the main objectives of this act were to protect the interests of the consumers by providing them good products and services at a very reasonable prices, to promote competition in the Indian market, to prevent the combinations, uh, ac- acquisitions, mergers, and amalgamations. So basically, this Competition Act was introduced so that healthy trade practices could be actually introduced in the country. There should be no extensive legalities which should be there. If anyone wants to land up into new business or a new trade that they want to grab any new opportunities which is available, they want to grab. So there should be no unnecessary restriction on these organizations, because if there are unnecessary restrictions levied by the government on the players in the Indian market, then it is very obvious that the Indian business houses could not groom so well in the current scenario. And this was the main reason that we did not have some big international players in the country till then. And neither did we have any MNCs coming into our land to do business. So that is why, to ensure this kind of freedom of trade in the Indian markets, it was understood by the government of India that it was highly necessary to introduce new trade practices, which could actually protect the interest of the consumers, right? And this Competition Act was actually protecting the interest of the consumers by, letting lots and lots of different business houses come into the market and enter into different industries. So with more and more competition, each and every industry was looking forward now to serving their consumers in the best possible manner. And when there is a lot of competition, each and every organization is actually trying to improve its products and improve its services so that something better can be offered to the consumer. So, this is rather in the best interest of the consumer when there are multiple players in the same industry. They get different brands and they can choose out of those different brands the different features of each and every product that is offered by different brands as per their needs and their requirements. Then of course this was also promoting the smaller organizations. Also, they were preventing any kind of abuse of smaller industries by the big players of the market, the dominant positions that the big players were having in the Indian markets. So, it is obviously a trend that every bigger fish eats the smaller one. But unless you are giving a healthy environment and a bigger space for each and every Indian player to function in the uh, you know industrial arena, you are not going to have the smaller companies grow. And in our previous session, I had told you that almost, a major share of the Indian economy actually depends upon these SSIs and MSIs. So SSEs and MSEs. So when this small scale industries and the medium scale industries are not going to grow, only depending upon the big Indian business houses would not actually let the economy flourish. And that was the major reason why the GDP of the country was not increasing. So any kind of adverse impact of this kind of dominant position which the big business houses were having in the market scenarios. So to curb down those impacts and to prevent the interests of the small scale industries and the medium scale industries, this Competition Act was found to be very necessary, and later on it actually proved to be a betterment in this field. So this also in fact ensured any kind of freedom of trade in the Indian markets, and regulated the operation and activities of the uh, mergers and acquisitions that the different companies were doing. Otherwise, if there is no organization to actually keep a check on these kinds of mergers and acquisitions or the amalgamations that are done. Sometimes, all the big names, acquire these smaller Indian business houses or the smaller Indian industries just to, increase their market share or to remove the other players who are eating up their market share. So, this Competition Act was actually covering some very important aspects. The first and the foremost was the prohibition of anti competitive agreements, which is none other than what I just spoke about, like, two companies coming together to actually curb down the, uh, you know, sales of the third player or the smaller players. There are a lot of competitive agreements which occur between these types of organization. So this act actually made it a point to keep a check and to prohibit any kind of such anti-competitive agreements that used to occur between two big industries. This act also tried to prohibit the use of dominance of industries in some particular sectors, so that any kind of monopolistic activities in trade and monopolistic trade practices could be reduced. This act also covered the aspect of, regulating of you know the activities like acquisitions, mergers, and amalgamations. You know, they made sure that a certain size of acquisition, merger, and amalgamation only took place. Beyond that, no kind of merger or acquisition could be done. So this was another regulatory practice which actually, created a healthy competitive environment in the Indian industries and the arena of Indian industries actually. This act also established the Competition Commission of India, which is actually the main regulatory body which keeps a check on all the trade practices which are conducted in the Indian industries or conducted by the Indian industries. And the power and functions of the Competition Commission of India are pre-decided, and on the basis of the powers that this body has, they can actually take an action against any kind of corrupt practices that are being conducted by any organization or two in the nation, so as to save the interests of the smaller players in the market scenario. So this act basically identifies three ways in which it can have, which three ways which can have adverse effects on the competition. The first one being the anti-competitive agreement. These types of agreements are vertical and horizontal both, and any kind of impact or anti-competitive agreement that the organization is having, these kind of agreements are totally curbed down and brought to a halt at the same time by this commission. They have the power to bring it to a halt. Secondly, any kind of abuse of dominant positions, enjoying a dominant position will not be a crime, but its abuse will be a crime according to this Competition Act. And Competition Commission checks that every organization which is holding any dominant position in any particular industry, they should not abuse any smaller industry or take the incorrect benefit of their powers or the position that they have. And thirdly, of course, one of the most important aspect was the elimination and reduction of competitors in the market, which is, as I told you, done through any kind of acquisitions, mergers, amalgamations by the organization. Unless two companies are coming together, to serve the customers' best interest, or maybe they are just coming together uh, to improve their own profits, and they are not harmful for any third company, and it's okay. But any kind of amalgamation or acquisition that is occurring just for the sake of total weeding out of any other smaller players or the smaller players in the market, that should be restricted. And this was why this act was installed in the country. And this act identifies these three ways that are just shown to you in front of you on the screen, through which they can curb down any kind of adverse effect on the competition in the country. So, with this, we have almost come to an end of the discussion session. Today, we have discussed the new economic policy that was introduced by the government of India in the year 1991, and we have also discussed the competition act which was brought into effect in the year 2002. And this competition act was actually aimed at bringing in some healthy competition within the organizations in the country, and to save the interests of the consumers and the small players in the market in the country. So with this, we come to the first session of the third unit, which was the introductory part of the third unit, actually, wherein we were discussing the economic policy. Further, we will be also discussing the different 5-year plans and how the growth took place during these different 5-year plans. As I told you that, ever since the post-independence scenario. Earlier, I had discussed with you different, reform measures that were required, and what kind of conditions were prevailing post-independence. So, because of which there was this need of coming up with some 5-year plans, and we have had altogether around 12 5-year plans till it was brought to an hold by Narendra Modi's government. So, with this, we come to an end of this session, and here is a small quiz for all of you that is based on the session that we have had today. So my first question is, which of the following is not an objective of the Competition Act? And the options that are given to you are: A, to protect the interest of the consumers by providing them good products and services at reasonable prices; B, to reduce the competition in the Indian market; C, to prevent the interests of the smaller companies or prevent the abuse of dominant positions in the market; D, to prevent those practices which have adverse impact on competition in the Indian markets. And answer is B. The aim of Competition Act is rather to increase the competition between the Indian industries. Here is the second question. Which of the following is not one of the ways that the Competition Act identifies which can have adverse effect on the competition? And the options that are given to you are: A, anti-competitive agreement, vertical or horizontal; B, abuse of dominant position. Enjoying a dominant position will not be crime, but its abuse will be a crime; C, increase in the number of competitors in the market. And the answer is C, increase in the number of competitors in the market. Here is my third question to you. Freedom for expansion and production to industries was offered through, and the options are: A, corporate restructuring; B, liberalization; C, corporate governance; D, globalization. And the answer is B, liberalization. And the fourth question is, the economic policy was launched in the year, and the options that are given to you are: A, 1980; B, 1991; C, 2000; D, 2010? And the answer is B, 1991. Here is my fifth question. New economic policy of India was launched under the leadership of, and the options given are A. Morarji Desai, B. Indira Gandhi, C. Jawaharlal Nehru, D. P.V. Narasimha Rao. And the answer is D. P.V. Narasimha Rao. Here's my sixth question for you. The main objectives behind the launching of the new economic policy NEP in 1991 by the Union Finance Minister Dr. Manmohan Singh are stated as follows. And the options that are given to you are A. To plunge Indian economy into the arena of globalization. B. To bring down the rate of inflation. C. To achieve economic stabilization. And D. All of the above. Yes, the answer is D. All of the above. The next question is, the first 5-year plan in India was launched in the year 1947, 1951, 1961, 1991. Yes, the answer is B, 1951. It was launched in the year 1951, a few years after independence, under the leadership of Pandit Jawaharlal Nehru, the Prime Minister of India then. Here's the next question, the eighth one. The MRTP Act was introduced in the year A. 1969, B. 1981, C. 1979, D. 1991. And the answer is A. 1969. So this is the ninth question. According to the Monopolies and Restrictive Trade Practices MRTP Act 1969, all those companies having assets worth dash or more were called MRTP firms and were subjected to several restrictions. A. Rupees 1 crore, B. Rupees 10 crores, C. Rupees 100 crores, D. Rupees 1000 crores. And the answer is yes, C. 100 crores. Here's my next question. Who was the Finance Minister of India? Who was the Finance Minister of India when NEP was launched? A. P.V. Narasimha Rao, B. Dr. Manmohan Singh, C. Gulzari Lal Nanda, D. Yashwant Rao Chauhan. Yes, the answer is Dr. Manmohan Singh. And with this, we have reached to an end of the quiz. I hope you have benefited a lot from this session today and also from the quiz that I have to offer. These MCQs are actually helpful for a lot of attempting a lot of other exams and in online study pattern. Of course, the MCQ is the best way to analyze any person's knowledge, and that is the reason why we have some MCQs always at the end of the quiz, so that you can just judge as to what kind of questions can be asked on the basis of the different sessions that we keep holding. So today we are coming to an end of the introductory part of this unit, which was about the policy changes that were introduced by the Indian government in the nation, and why these policy changes were introduced, what kind of reforms were done under these policies, and how actually these policies were helpful for not only the big Indian business houses, but also for the small scale industries and the medium scale industries, which form a large part of the Indian industrial sector. And actually, they are the ones which support the Indian economy to a very large scale. So, unless the year 1990, the people of India had no clue as to what actually a liberalized economy can do for them, what these liberalized policies and measures which could be taken by the government can actually do to them, what kind of real reforms that can come up can do in the country. And later on, it was, this new economic policy proved to be a magic spell for the entire nation, because post the era of 90s, we saw tremendous industrial revolution in the nation. We saw tremendous number of MNCs actually coming up in our country for business purposes, and the employment rate increased. The Indian laborers and of course the skilled professionals of India actually saw that they could earn so well. So with this, the spending power of the Indian families increased, and with that, it is like obviously a vicious circle, that unless the country is going to have a spending power or spare income to spend upon other than only their basic necessities, how are the Indian business houses actually going to grow? And of course, this new economic policy actually opened the doors for the MNCs and the FDIs to come in. A lot of Indian companies came into tie-ups with the foreign countries, and this actually brought in a flow of FDI into our country. Foreign exchange rate increased, and this actually took India to a greater leap, and we could actually, the Indian economy could spread its wings to a high level, and we saw revolution in all kinds of industrial sectors and the agricultural sector also. We saw a lot of reforms in the biotechnology sector. We saw biotechnology sector grow. We saw biomedical engineering grow in our country, and we slowly saw the economy becoming very strong and sound. And this is the major reason that today, in the year 2021, we have seen our country in the past 3 decades. 3 decades have gone ever since the new economic policy was introduced. And we have seen the country grow from a very low level to, now we are getting recognized, and we are actually in the race of being the developing country. And at one point of time, we actually aim to be counted, maybe by 2045 we actually aim to be counted in one of the amongst one of the developed nations of the world. With the only major problem in the country being the population outburst. So once these kind of corrective reforms have actually shown their results, we will maybe prosper to a higher level. So now it is time to conclude the session. I hope that this session was thoroughly informative for all the viewers. You are most welcome to leave your questions, your queries, and your other comments as per the likes and dislikes about the session in the comment box. I'll be very happy to sort out any queries that you have regarding Indian business houses. Thank you for viewing all the sessions of these Indian business houses. With this, we are covering, slowly we are covering the entire syllabus of Indian business houses, which is designed at par as per the industrial needs of the for the upcoming grooming professionals of the country by Suresh Ganvihar University. We have a system of introducing latest dynamic curriculums, and we keep reforming our curriculums every semester. So this is Dr. Swati Mishra from International School of Business Management at Suresh Ganvihar University, Jaipur, signing off. Thank you so much. Have a nice day.
Mhm.